Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is the 27th, Tuesday. Oh, and we got a webinar today. So I don't know how we're going to do this exactly, but I guess I'm just going to have the webinar going. I'm going to be watching it in the background. We're still going to have the stream going, and I guess I will comment on it as it's going, but you won't be able to hear it through the stream. You're going to have to sign up for it. So I will come in here, I guess, and give you guys the link for the webinar. April 27th, part 1. So we're going to be watching this webinar today. It starts at the top of the hour. So, yeah. If it's a little bit quieter than normal, that's why. It's because we're watching the webinar. Probably going to be a lot of things that we already know, but it's going to be good to watch because, well, sorry, for me, it's probably going to be things that I'm already familiar with at the very least. But, it's kind of going to be good to make sure, like, you got everything. You know what I mean? So maybe there's one little tiny piece of information that you don't have, and that ends up being significant, right? So that's why we're going to watch it. It is going to be about the treasuries. So, with that out of the way, you look and sound better today. How are you feeling? Still woozy? No, I feel fine. But, the thing is that when I was feeling woozy the other day, it wasn't until a little bit into the session, I really don't know what causes that. It could be my medication doing weird stuff. I don't know. It's weird. I didn't eat quite as much as I wanted to today, but like I'm like going through and I'm like, well, I think I ate a lot yesterday. So I don't know. Okay, well, let's go through the charts, see what they did overnight, shall we? So in the E-mini yesterday was pretty quiet, but it was an update and not a whole lot of movement since then, but we're just kind of sitting there at all-time highs. There was, we should note though, at the end of the day yesterday, there was these dives, 2 of them, going into the last 30 minutes of trading, and it was reported that a sell program sold in 1,000 different names. So some huge sell program, I can't imagine why you would do that. But maybe it's some sort of forced liquidation. That is something that we got to keep in mind. And in a related note, I was seeing a story that the overall losses from the Archegos the blow up is now topped $10 billion, which is just insane. Okay, so anyways, that's the E-mini treasuries. Treasuries, saw some downside pressure, but then during the regular session, they came back up and now it's just kind of reverting. So yeah, it was kind of a slow day just because there's a lot. This is a pretty packed news week. So, they didn't really do a whole lot yesterday. Oh, here's oil, gold, silver, kind of the same. Silver a little bit more positive than gold. And copper's doing great, but having a big reversion. Look at that, man. The way that copper just like, what's wrong with copper? Something's wrong. And then whoop, right back up. Crazy. That asset, man. That's the place to be, isn't it? And then the dollar, not as negative as it was yesterday. Yesterday, especially early in the morning, looking pretty ugly for the dollar. But today, we're doing okay. So, coming back here, need to blow my nose. So yeah, I don't know if we're going to take any trades today because of the webinar. But we'll still be here and we'll still be talking. Let's see here. Details for joining. To join the event, please use the following link. Okay. I guess I have to add an extension into my web browser to be able to do it. Oh yeah, so we should come in here and set up the text-to-speech bit again. Not taking trades. Sorry, HF. Today there is a webinar being run by the CME. Join event. Today there is a webinar on treasuries being run by the CME. So switch device. Let's see here. Which one should we go to? No, I think I should do. There we go. Okay. Boom, boom. So I'm the first person to pop in and I would ruin their testing. So I'm just going to have that running over here. What is the webinar? I linked it up there above. It is Foundational Principles, U.S. Treasuries Webinar Series, Part 1 by the CME. Just hopping in, yeah. So if you guys, I put the link up above. Make sure you're registered. We'll all watch it together. I won't be able to, I'm not going to like stream their thing because that's their thing. You know what I mean? So I will be talking about it, but you won't be able to hear it on the stream unless you're already watching it. Okay, what's it about? Will it interfere with price moves? I don't think that it will interfere with price moves, but it is about the treasuries. Yeah. So yeah, just you keep that. If you haven't registered for it, make sure you register for that because we're gonna, otherwise we're gonna be listening to it, and I'll be talking about it, what they're saying, and you'll have no clue why I'm saying what I am, which is okay too if you want to do it that way. Oh, by the way, I should turn these on. I was worried like my algorithm wasn't taking very many trades yesterday, but then when I went back and I looked at it, it really just it shouldn't have been, and it did take one and it was pretty good. Oh, so yeah, it's just an educational thing. So I'm going to bet that what they're going to do is they're going to come in and they're going to talk about what is the dollar value of a basis point and the cheapest to deliver and all of these sorts of things that you kind of utilize to price out treasuries is what I think. So, But we'll see. It's going to be it's a 4-part webinar series. So, yes, looks like another update. Yeah, I mean, it looks bullish. I have to say, I'm a little weary about these big moves that we had come in at the end of the day yesterday. And I'm wondering if there might be more off, because I never really saw a good explanation for what that was. And somebody doesn't just come in and sell 1,000 different names all at once. You know what I mean? So that has me a little on edge. Okay, don't need that. Oh, wait, they say what's in it. David will discuss the size and scope of the U.S. Treasury market within the global bond marketplace, Treasury market terms, types of debt, and quotation convention, U.S. Treasury futures specs, terms, and depth. And then in part 2, they will talk about the delivery process, CFs, and basis defined, cost of carrying the net basis, the internal rate of return, and the cheapest to deliver security. Gotcha. Wow, he's going to spend a whole hour on the size and scope of the U.S. Treasury market with those 3 things? Huh. Well, they're going to be interesting. How should I take notes? Like, I'm wondering if I should write down, take notes. Maybe I should use this. Well, I tell you what, I will have it here. I will have it here next to me. Get my pen. And I will treat it like a serious school class. Writing things down. Because you remember it better, you write it down. Like when I got into school and they would give you the outlines and everything, I did not pay attention as well. I definitely did not. When I was writing everything that the lecturer was saying down, like it was in high school, I did better. So I'm going to do that. Okay, so a couple of big names, by the way, coming through here. We got Microsoft and Google due after the close today. Oh boy. UPS soared 8.1% in pre-market trading after reporting stellar results, including adjusted earnings per share for the first quarter that beat the average estimate. Good deal. General Electric reported a 20% fall in quarterly profit on Tuesday, hit by a slump in demand for aircraft engines as airlines struggled to recover from a pandemic-led collapse in travel. 3Com stock tumbled even though the company reported net sales for the first quarter that beat the average analyst estimate. I'm seeing this happen again. So yesterday, Tesla, they reported a profit, but their profit was mostly from the EV credits still. So the actual profit from selling their stuff is not coming through. And I think that the market was really upset by that. And they've fallen a good 3 to 5%. And it's looking like they're heading towards that 7,000 level that they've spent so much time at over the last few months. So, boom, 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 boom. A Fox anchor admitted on air that his show was inaccurate when it claimed that President Biden is trying to require Americans to sharply reduce their consumption of red meat. Oh, man. Slow market bored to death here. Yeah, well, let's see here. So we do have some stuff today, right? Yeah, we got like the consumer confidence enrichment Fed. So I'm expecting that the market will be like really quiet until 8 o'clock when the webinar is over. So, anyways, so on this story about the red meat thing, this one is kind of interesting to me. It's aligns with my interests, let's say. Because here's the thing. The Daily Mail did a story, and what their story was, basically, Joe Biden has set up some pretty aggressive climate change targets. Like, we want to reduce our carbon emissions by like 50% by 2030 or something like that. Okay. Like a really aggressive target. Okay. And what the Daily Mail did is they went through and they said, okay, what would the United States have to do to meet those targets? And they did all of the math. And one of the pieces that they have in there is they said, well, in order for us to do that, Americans would have to reduce their consumption of meat. That you would basically be able to have one hamburger a month, right? So that came from the Daily Mail, I believe, is where I think it originated from, right? Okay, good story. I think it was, I think they're generally right. Like the climate change targets that Joe Biden wants to go with, that he's basically just taking from the activists and passing back, are insane. Frankly, like, they're unrealistic. It's not going to happen. It's almost like not even worth worrying about, because it's not going to happen, right? Well, conservatives read that story. Yeah, that's it right there. That's the article right there. This article is being disputed now. Well, I wouldn't say that it's disputed. Have you seen somebody that disputes their analysis? So I haven't seen that. Western world and climate change playing the role of carbon credit for the slave nations that produce our consumption. So I don't understand the carbon market thing. I think it's this artificial market makes no sense to me. Anyways, but what happened was this, is all of the conservative outlets picked up on the story, and instead of reporting it as, this is how aggressive these targets are and what would have to happen, instead they reported it as Joe Biden is proposing that Americans can only have one hamburger a month. That's what they reported it. So the liberal media kind of jumped on this, what I would call, really, when you think about it, it's a technicality, but it's a really important technicality. The left is totally right about it, that they're misreporting the story, right? But at the same time, they're kind of being dishonest too. They're distracting from the real point that the original article was making, which was that these climate targets that Joe Biden has been putting out are insane. So this has been battling out in the media, and it's just like the perfect example of why I hate modern news, because it's exactly this. It's like, you get this telephone, it's like these outlets, they aren't reporting their own stuff, they're reporting on what other people are reporting, and then they sell sensation. Yeah, so this is the other thing that really frustrates me about this one, is nobody wants to discuss it. So it's a what do we call it? Attacking the messenger, right? It's a logical fallacy. So if we talk about that, and then the first thing is, well, the Daily Mail isn't a very reliable source. Irrelevant. They made a claim. Is the claim true or not? So their analysis of what would be required to achieve Biden's climate change goals, is their analysis incorrect? Why doesn't anybody want to talk about the actual issue? You see? Well, I think it's because they can. I don't think that anybody actually can. I don't think that any of his, I have no clue. Like, how would I even begin to dispute that? I don't know where they got all of their analysis and their numbers and all that sort of stuff. So I can't even begin to think about how I would go about proving or disproving that, And I think that's what everybody else is doing. They just know, well, this doesn't align with my previously held beliefs. Ergo, I'm just going to attack that the Daily Mail is a tabloid, a right-wing tabloid that shouldn't be listened to. You're a very logical thinker. Thank you. I'm a little too logical. Oh, I've been talking about this with my wife. I was like, I'm kind of an asshole. Like, it's not like I'm mean to people or callous or anything. It's just that I want to be effective at whatever it is that we're doing. And far too often, I'm finding that involves ignoring people's feelings and making them feel good and focusing straight on what is true, what is not, what is logical, what is not. And so I feel like we're not as close as we used to be, us, me in the stream, you guys. And, I got to do better at not being such an asshole when I'm trying to explain, when I'm trying to get people over to the logical side of things. Like, how do you go into logical, yeah, fuck you, thinking you know it all. There you go. Yeah, exactly. That's exactly what it is. He said a lot more foolish things, so don't waste your time just talking about it. Well, but it's not just, in this particular case, though, it's not just something that he said, though, is it? I mean, like, it's as far as I can tell, it's like an outright, like, we're going to make this the government policy. And we want all of the government agencies to start talking about how we're going to do this. I don't know. Like the thing that's kind of funny about it is that, like, it is like people are pushing get rid of meat, right? Like the Beyond Meat, there's a big stock and there's this whole movement, and it's a political thing. The vegans, they want to get rid of meat. It's not like there aren't people out there that want this to happen, right? You're right, though, when the Daily Mail is kind of like a tabloid in the UK. Now, tabloids in the UK are a little bit different from tabloids in the United States, okay? The tabloids in the UK actually do report, like, significant news from time to time. But they are a right-wing leaning newspaper, and they're... let's say their integrity is often called into question, but that is not something alone that we can, we still have to go through and say, what's true and what's not by examining the issue itself. Uzi, I think it would be interesting to see what we'd have to do with cows, massive animals with no natural predators, if we were to stop, right? Like... So think about this. I read. Oh man, I wish I could remember the source. I think it was on a TikTok though. So a little bit good question about the source, but I bet you we could go and find it. And they were saying that in the 70s, that crops that like growing food was 100% owned by private individuals, and that in the last 40 years. That it has almost completely flipped on its head. Only like 25% of food production now comes from individual owners, and 75% is owned by corporations now. Can you believe that? And almost all of the crops that are grown by the corporations are genetically modified versions, right? So if you want to go and get wheat that is not genetically modified to have more gluten in it, you can find it, but it's hard, right? If you want cow that's not, hasn't been bred into, what cows are today, going to be pretty difficult. Like, is there somebody out there that's like, these cows are more like the breed of cows that people ate 100 years ago? I don't know if that exists. You know what I mean? But so I kind of wonder, okay, so if we were to go down that route where they limit meat consumption and cows just all go away, like, who would keep them? You know what I mean? Like, so there'd be very few farmers that keep them. How do we, there's still be cow breeders and stuff, like... Because once you realize how cultivated some of these industries are, it's actually a little scary. Or like a better example, bananas. Like the Cavendish banana they're all a clone. Like they're literally every banana that you eat comes from a clone of the same banana plant. And there was another banana plant that people used to eat in like the 50s that they say tasted better. That bananas used to taste better. And then there was a plague. That plant was susceptible to a certain kind of disease. And because they were all a clone, they completely died out. And then they had to replace it with the Cavendish, which doesn't taste as good. So it's like, it's gone. It's straight up gone. It'd also be funny to see what happens with land distribution when everyone is forced to eat plant-based diets. The Soylent Green is exactly. Did you know that somebody actually like went and made a product called Soylent Green? That was essentially like, this is everything that a human needs to eat in a day. Forex Live tweets inflation is the buzzword as food and metals prices continue to rise. I guess we're probably going to end up talking about food a lot more these days, huh? Because another thing that's interesting about all of this is that it looks like there is going to be food inflation, but not because of the financial crisis or the weakening dollar or any of that. I'm really, when I go and I look at like the macro framework, I just see a perfect storm for inflation, where it's like, not only did you have this pandemic and you have these supply side constraints that are making prices rise, and you have all of this dollar printing that makes people worried about inflation in general. But then there are things happening in individual industries, such as the metal and the food industries, that are putting further constraints on supplies and causing prices to go up. And so it's just like, you're basically, what's going to happen is we are going to get inflation. Or not, let's not say we are going to, but basically what I think could happen is we could get inflation, and we could get inflation beyond the 2% target that the Federal Reserve has out. And, it'll be a problem, and the Federal Reserve will have to raise rates, and it will like totally kill the economy. And everybody will be like, see, Federal Reserve, you were wrong. There was inflation and you did need to taper earlier and all of this. And they'll say, no, actually, it was just, all of these things that happened where there was this plague here and there was this famine here and all of these things. And that's what caused the inflation and not our monetary policy. Mark my words, that's what's going to happen. This is good for garlic coin. Hold on, my nose itches so bad. I need to go blow my nose. Hold on. Maybe I should just go moisturize it. This is good for garlic coin. Yeah, everything's good for garlic coin. Where are they, by the way? I haven't looked at this today. Yesterday, man. This thing is just so funny to watch. Okay. So they haven't really changed. So they're at 31 cents right now, which frankly, when we started this like a week ago, it was like 1 cent, and then to 10 cents, it was like, wow, 12 cents is amazing. And now all of a sudden 30 cents, like what? 100% overnight? Well, somebody bought it up big time over here. Somebody bought it up big time, left a big liquidity pocket behind them. But then afterwards, people bought it up and it's been sitting up there. So it seems like for now they're content at 31. But if we get other big people coming in, could continue up. Interesting thing to me. Wait, hold on. Oh, just a quote. Something that's interesting to me about it is that, like, there's a lot of volume over here. Like I was looking at, okay, because I own quite a bit of Garlic Coin, and I was like, how easy would it be for me to cash out right now? And it would actually be pretty easy. I did all the calculations, and according to my calculations, the impact that I would have on the market is very, very light. Okay, so I can hear them saying some stuff over on the webinar. It's about 5 minutes. I tell you what, because my nose itches like crazy, even though there's like literally nothing in there. So I'm gonna go and like put some moisturizer in my nose, and I'll be right back. Okay. Okay. So, just for those of you just turning in, I will post the link here again for you. There is a webinar today being run by the CME group that starts in 5 minutes, and I'm going to be watching that. I am not going to stream it to you, so it will be off screen, and I will be listening to it where you can't listen to it. But I will kind of be making comments about what they're doing. So if you want to watch the webinar, it's a free webinar. You just sign up at that link that I just gave you, and you can watch it. It is Foundational Principles of U.S. Treasuries, and it's the first in a 4-part series. So where's the other one? Show you, I give you the other one. Here's the other one if you want to sign up for the other part here. What is in the other one? Practical applications. In part 1 of the series, David will cover the pricing behavior of U.S. Treasury basis trading using market examples to demonstrate the impact of various pricing inputs. Ooh, snap, really? In part 2 of this series, David will continue by discussing how to use U.S. Treasury futures in yield curve trades and invoice spreads, as well as managing duration risk. So it looks to me like in part 2 of the webinar series that he's going to talk about things that I've wanted to do and like I know are probably things, but that I've never had any clue how to do them, right? Like how do you trade treasuries based off of actual fundamentals, and to be able to come in and say, okay, X thing happened, how should that actually move it? So this whole thing will be good, and I'll be taking notes. I'm excited, always excited to learn more about treasuries. Where's Stick? I wanted to talk to Stick today. So I watched that video he was showed talking about from Nassim Taleb, where he was talking about what we say are fat tails aren't really fat tails, and he was right in that that's the way that Taleb defines that. So like I went and I searched around on the internet, and like almost nobody on the internet was using it in the way that Nassim uses it. So I think that we should use Nassim's definition, but I think that the what we look at, where it's like there's more outliers than there should be and less in the middle as there would be in a Gaussian distribution, it seems to me that they call that a long tail, not a fat tail. So like, yeah, I don't know. More to learn over there. But the thing that he said in that video that really perked my interest was he said, because markets have fat tails, co-integration doesn't make sense. And all of a sudden I'm like, whoa, hold up, wait, really? So what are the practical applications of that? Does he have a better way? It's interesting. Very interesting to me. You know what? I need to fix this so that we can see that correctly. There we go. Close down Garlic Coin. Also, we need to see this and this. Bitcoin still not moving very much from yesterday, by the way. So, oh, cool. It is being recorded, so you should be able to watch it later. Cool. David Gibbs. Write his name down. David Gibbs. After this, we'll see if we find him on Twitter. Wow. Okay. So he's showing that sovereign debt is much larger than the corporate debt market. And outstanding debt. Based on the amount of outstanding debt, which country represents the largest bond market? China, US, Japan, or EU? I think it's Japan. I think Japan has issued more debt than the US out there. I'm trying to be clever here, but I think it's Japan. Am I wrong? What do you think? What do you guys think? Probably should have answered US. It's probably going to be the US. do. US. It probably is the US. Yes, okay. I was wrong. How much are they? Let's see here. Need to make this bigger. There we go. Hmm. So Japan is a pretty high issuer, but it's not. It's still only like half of the US. Due to COVID pandemic, what happened to global bond issuance in 2020? Oh, it increased. No, almost. I'm almost certain that it increased, right? The Azores, I've never heard of that place before. When? Okay. Hmm. Oh. Let's see where is he getting at. So he's saying because the United States is issuing so much debt, they're a larger proportion of the global bond market. And so all of these bond managers have more risk to the U.S. bond market as a result. And that's really important for us in the Treasury futures. No, they no longer have a treasury bill contact. Mm-hmm. Okay. And he's just talking about how to convert from the decimals to the 30 seconds that we've got here. Pretty standard, I think. We might need a calculator out here. He's going to talk about how when they're going to deliver that they're not all the exact same bond. Oh, maybe not. Hmm. Okay. Hmm. He's talking about things that I'm familiar with before, but I never really paid attention to. Just equities starting. Are you sleepy? No, I'm just taking notes. I don't know how much this thing about how the difference between the shorter term treasuries and the longer term treasuries, it matters, but it's interesting to me. So it was always kind of like a wire. It's every single one a little bit different, but now I know why. They're saying that like the 2 years and 3 years are issued like a different time of month, basically. So that was a pretty ugly decline there in the E-mini. Gabby tried taking it and immediately got stopped out. Hmm. Not looking good for the E-mini here, man. Hmm. What do you think these numbers at the top of the hour are going to be? Given that, as I don't see any news coming through. What was that? He's talking about how the 2-year is priced now. So he's talking about them wanting to move things over to a decimal. And I'm sitting here thinking, man, I think I would prefer it to be in 32s. Yep. Hmm. It's weird. I understand what he's saying, but he is not using the words that I would use to explain that at all. When you're asking why don't they move over to decimals? Look at that 3K at 41.75. What the hell? Oh, that's been there for a while. Jeez. Ouch. That big order that was at 75 disappeared. They traded a little bit of it. Hmm. They asked him, why does it take 3 days to settle? And he had to laugh. They're asking all the questions that for the people that are really involved at the CME are like, well, people want to change it, but it never changes. Wow. You see that stop out of the retail traders there? Here we're getting the numbers now. Consumer confidence 121.7 versus 113. That's good. Richmond Fed Manufacturing Index 17 versus previous reading of 17. So in line with expectations. The retail, the micros got screwed there hardcore. Look at that. Big amount trading here at 70. Look at that. Okay, so webinar is done. Did it close? I guess it just automatically closes for me. Well, I kind of missed. I really wanted to get in at 71. So I already kind of missed my... Oh, wait, I don't want to get rid of that. Kind of missed my spot. It was 72 is what I wanted. I was going to say, like, the way that stuff happened down there and with the number of contracts that traded at 4170, it was like, yeah, there's probably going to be a bit of a pullback here. You can see the NASDAQ kind of trying to drag us up a little bit. I'm going to bring the market depth tape to the back again. Since I'm not seeing that big order, looks like it's just done and passed. Maybe it was just a big trade over the numbers that were about to come out. I don't know. Should be a little bit concerned about a hold down here, so we might get dragged back down to that area. I love how they oversold. I don't think we just used to market moving. Well, yeah. So like my immediate thought when I saw that was I don't want to get involved in this unless they fill the order and they go through it and it reverses. But which, you know, before the news was a little bit of a questionable thing, but they didn't do it, so it didn't matter anyways. But I'm sitting there thinking, like, you don't want to get involved with a big guy like that. You really have no clue what he's doing. And you can see the way that it went through for the micros, right? It was a bad trade if you had taken that, because clearly a number of people in the micros got stopped out when that moved. When like the news released down at the lows. So pretty crazy, right? Yeah, scary. Scary would be a good way of putting it. Like that slippage, like that's somebody slipped. There was a difference of almost a whole handle. It was like a 6 tick difference between the micros and the ES at one point. Because the ES went to 70 and the micros went to 69, 68, 75, right? Like somebody got screwed there, man. Something definitely going on here. Like somebody was hedging something big. They're getting a decent amount of trade here. Okay. Wow, did you see that 75 pull for a second? Like there's the liquidity here looks a little what is the word? I'm always searching for adjectives. Kathy Wood still buying dips opportunistically. Some of these offers here look a little flighty to me, don't you think? bunch of financial juice here. Make sure that I'm getting them. Okay. U.S. consumers' confidence explodes to highest since February of 2020, but quote-unquote hype stalls. Cool. And let's just adjust things here. I think we can swing this along now. At least till maybe the open. And let's see. There's still so we're definitely getting a profile here. It looks like there's some buying all the way up to 75. We'll see if sellers are really there through this other area. In fact, let's clear that. So we can see, will it just gap back through here, or is it going to be kind of like a slow grind? Do you have a Lamborghini? No. Yeah, you're probably not going to make that much with futures trading, and even if you did, I wouldn't recommend buying a Lamborghini with the money that you made. Oh, I missed that. John was saying you frequently make comments like this about things you've struggled to implement or understand. Well, that's not accurate. I think I understand how RSI works pretty. I think I understand exactly how the RSI works, and I've implemented many different algorithms using RSI. It's just that the data says that it's not very good. So a little bit of a drop there, but it looks like the buy side liquidity is still there. Overall, though, I guess I should note that it seems a little bit quiet given what happened. So it's like we kind of, the news came out, we kind of got stuck in a little bit of a vacuum here, and like interest is dying out. Okay, it looks like that's that for that one. I'll let it stop out. Okay, so lots of volume at 68, but then they eventually do break through it on the sell side. I'm not hearing anything on the news or anything like that. It does look kind of bearish. I think that there's still probably some good chances of some sort of a major reversal at some point, but obviously swinging it along didn't quite work out. And they touched it, but they didn't fill it. Hmm. Yeah, you're getting it in this spot in the 71 area now. And traded through there a couple of places. Very light liquidity. Oh man, the baby is upset. Vlad says Momo on Tesla is bearish. If I can get a fill here, it'd be very okay. Thank you, sir. The amount of risk that I was carrying on that was starting to make me a little nervous. Like this shouldn't be taking so long. It definitely looks to me like they're trying to bounce, but we're going to have this profile area at 75 again, right? If they break through the top of this, then we might run into another situation where the liquidity dries up and they swing back through, right? Is there something going? So I need to take a step back here. Look at the overall markets, maybe. So I can see silver and gold moving around quite a bit, but ultimately just only slightly higher. Oil, kind of the same thing. Copper actually being a little laggard. The 6J is tilted down, but it's just kind of doing so in natural waves. The euro is kind of all over the place. So the dollar is basically like sitting at 90.82 and just kind of rotating around that area so far. And then the E-minis, the indexes had a pretty good sell-off, about 10-point sell-off from the open. Natural pullback, still well within levels from the previous day. If we were to break 63, then things could get ugly. And where were we on stop outs? We did have like a full stop out. So if there's like a large sell meta order coming through, then I suppose there could be more downside. But in terms of like people's positioning, there's probably not a whole lot of volume left to sell. Mm-hmm. Overall, though, they started to get back up into that liquidity area, and at least that last test that it didn't take. So it looks like they're going to try again. Yeah. Mm-hmm. MVIS stock pump negative 17%, or wow. Jeez. China's state-owned media outlet Global Times suggesting Tesla car sales in China to drop sharply due to public relations crisis. Huh. Or, alternate theory, the Chinese realized how big of a component the index's Tesla is and are intentionally trying to hurt them to harm the larger U.S. economy. MVIS, that's one that we've looked at recently, right? I forget what they were. Oh, that was a meme stock at one point. You're calling it a penny stock. I don't know if it's a penny stock, but I forget what they do, though. Microvision. Maker of auto sensor technology. Oh, it's okay. So it's an automated car driving stock play. All right. Okay. And Treasury just ticked down there. I'm going to reset things. Okay. So there they're regaining point of control. Yeah, sure enough. See how many times they went back and forth at 41.73 3/4. Traded 400 contracts on both sides, but it was like 10 at a time. Well, this bar is looking awfully strong, but I don't know. Given how long that bar is, what did they really sweep back up through there right away? Yeah, falling back in again. So I'd say it's good that they're able to get back up to 76 after what just happened, but I don't know. At the same time, so this is kind of like the seller's defense line, right? So if we're able to get a meaningful move here, meaningful break above, let's say 77 maybe, then I do think that things could be good for a move back to the open. But for the moment, the sellers do come in there, right? So, and we still don't really have a much of a clue as to where that selling was coming from. It kind of has hallmarks of informed trading. It was like very aggressive and all at once. And there were some large orders messing around as well. But we didn't get any news at those moments. And when we go overall, when we look at the news overall, there's not a lot of overall news today. Goldman urges its clients to buy equal weighted basket of these crypto-linked stocks. Cool. So can I just short this index? I was just reading Twitter there, like a couple of news stories came through on Twitter, but it didn't really do anything. There weren't really any significant ones. The Street tweets, does Facebook hold Bitcoin? Some speculate that the company's earnings report tomorrow will reveal crypto holdings. Yeah, that sounds like something that has a really high probability of being complete bullshit, though. Lumber limit up today. Wow. Machine Eater saying the most negative initial balance in a while. Yeah, but so we fell a good 10,000 contracts. The price action is not. I could be wrong. Maybe my view of it is just biased here, but it doesn't look to me like there's more selling. It's like there was that initial sell and then a lot of choppiness in through this area on decreasing deltas. So I don't know. I've never seen it like this before, to be honest with you. Do you see here in the 5-year? Okay. Big sell. Big sell. Slippery move. Goes straight to the stop out. Okay, so that's good. But then it rotates between sell side and stop out multiple times for a pretty extended period of time too, for like an hour, right? I've never seen that before. But like if it was a sell, they would, well, there was this right here, but then that reversed really quickly too. So I don't know if that's really predictive of anything, but it kind of suggests to me that people are trying to buy the dip. And probably there's a lot of selling that's just autocorrelated with it, But I'm not seeing signs that like the meta order is still out there and that there's going to be like another wave of selling or anything. But let's see, because they tried up there. I think I should probably close this. Let's see. It's basically scratch me for the day. Move this over here. Oh, it actually gives me a slight little win. GameStop is climbing after completing its previously announced plan to sell shares. Yeah, now that one is weird to me. So I need to see somebody go through a valuation of that company now again. Now that they don't have any debt on there and all that stuff, to be like, okay, so what's like a fair value for it now? Because it's still really high, like in the 200s. And like they sold shares, so you would think, okay, selling shares could be the thing that could like deflate it all and bring price back to like a normal level. But it didn't. The market just ate it all up. And then after it was done, they're like, okay, let's buy it again. Well, there they are. Trying to push it again. Trying to cross the line. So then they're doing crazy stuff again. There's actually a decent amount of buying there below 70. Hmm. Never good when my phone makes that sound at this time of day. And that's weird. I don't know. This is awfully quiet, like right there too. I don't know if I'm going to get another trade here today. So we may just end up being like, oh, because now I'm seeing the big increase in the dollar there. Well, Brett went from flat to 34 to 41 negative. That's interesting. There's got to be, like this this sell program that came in yesterday towards the end of the day. That must almost certainly is doing some of this action that we've got going on here today. And I'm still seeing the dollar go up here. Where is it coming from? Oh man, both of them, both the yen and the euro are pushing down and moving the dollar up. Meanwhile, the treasury is kind of down towards their lows. Hmm. This Guru Leaks guy is like really active today. For some reason. They're kind of shying away from it again, but I still think that at some point that they're going to pull it out. I was getting a little hopeful there, but yeah, I don't think they're gonna pull this out. So how you guys doing over here? There's a good number of people watching today, but you guys are awfully quiet. Oh, that's kind of interesting. Yeah, our graph is all messed up because we weren't really doing anything on the open. We were just watching the webinar, but that's okay. That's okay. I think I learned a thing or did you guys watch it? How many of you guys here in YouTube chat watched the CME webinar? They're just stuck there. Like I'm really like when it first got there, I was like, oh, I better buy it now. It's gonna jump up through, and I'm gonna miss it. But then it's like, There is a BitTorrent cryptocurrency. You're gonna come in and push our cryptocurrency on us. Listen, this is a garlic coin stream. This is a garlic coin stream. Don't waste us with these other shit coins. My garlic coin has outperformed your BitTorrent cryptocurrency actually over the time periods you're talking about. Well, actually, you say 197% in 24 hours, but in that 7-day period, let's see. Let's see, we go back. We'll do our dick measuring contest, okay? Oh, there is it gonna go? Is it gonna go? Am I gonna miss it? Like, I'm not gonna take another trade because I only got 5 minutes left here, but I think it's a buy the dip. Let's see. Okay, so garlic coin over a 7-day period is up 295%. So you got me a little bit beat. It would have, if it had gone back a few days, then it would have been better. Boring chop fest, says Riverman21 in Discord. Yeah. The liquidity is awfully stuck. Treasuries came back there. It's actually showing some absorption at 80. Can't take that one. I've been watching in the treasuries. There probably were some opportunities that I missed, but I didn't see them. And I was kind of looking. I never saw a spot where I felt like one was over or undervalued. Oh, there you are. When I thought maybe you had disappeared, that you had quit for the day.
Winston's mom says if you haven't hit the like button yet, please take a quick second to do this for the channel. It does help speculators its numbers, and we all know increasing numbers means profits. Thanks.
And it keeps doing this stuff that makes me want to buy it so badly too. I don't know why. I'm like, oh, I really want to be long here at 41.75. But then it's like it doesn't go. You think it'll do it? I mean, it's done. It's doing like what I would call a reverse head and shoulders. I don't know, like volume wise, how good it is, but. So I think this first move was, well, if I come over here, reduce this. This first move was the large meta order of some sort. There was some slippage there. This was the news right here. So let's just kind of discount that thing because it didn't really move in the end. And then this looked like another meta order because it just kind of came out of nowhere, went. And then this one was not the same thing. Like, the decrease in cumulative delta and the speed at which it happened kind of suggested more just a natural oscillation. Then back up, but then they're not able to really breach this ATR stop area. Which I've noticed they will come right up to quite a bit. There's definitely people trading that line. There's definitely people trading that line. Man, you know, the Treasury says is a good point. I was looking in the interest rates channel and Alligator talking about, maybe we'll have some fun before the Treasuries, but like it's not really moving all that much today. I mean, it's ticked up and down a lot, but it's been really tight. Okay. Well, that's my stopping point, guys. I don't know if it's going to do anything. Probably we're going to quit. And then who knows? But we're going to quit, and then it's going to go off. It's going to go right back to the open. We'll see. So large sell orders push markets down. I'm just going to say large sell orders on depth of market. That'll get the algorithms churning. Because, I don't know. When going back onto that, it's hard to like make a prediction on how it's going to move from there. But when an order like big like that kind of comes in, one of the things that's likely to happen from the evidence that I have and is that it will just chop in that area, that it'll kind of get stuck there. And that's basically what happened. That's why, again, I've said this many times on the stream before, but you got to be really careful about those big orders. And because I think that when you first start reading order flow, at least this is what I did, lesson that took me a long time to learn. You're getting in there and you're like, hey, that's a big order. That means I should take a trade, right? No, it means to get away from it. Get away from it because you don't know what it's going to do. It's not really a very predictive signal. So. And then you just get stuck in chop and you get screwed over in the end, right? If it's in chop, that means that you're not going to get your target either way. It's always going to come short and then it goes to the stop, especially if you have like the skewed risk reward, right? So, okay. And yeah, thank you guys. 16 likes. Very good. Stream did a little bit better today, so that's good. And tomorrow is FOMC day, so that should be fun. And I will do 2 streams tomorrow when we're doing that. So I will see you guys then. And in the meantime, stay profitable, friends.